Good morning, ladies and gentlemen, and welcome to the show. Listen, glad to have you guys here. Today is Wednesday, the 20th of November, 2019. And let's talk about what's possibly causing the repo market crisis. There's a number of banks that are having problems and financial institutions out there, including Deutsche Bank. Now, we'll talk about Deutsche Bank in a minute once I start the charts. But, you got HSBC. The CEO's ousted. Gone. They've laid off 10,000 workers, and they're also a large holder of custodial gold in the ETFs, like, GLD. That's one possibility of one of the banks that might be receiving part of this repo operation. Of course, we have Deutsche Bank. We understand what's going on with Deutsche Bank. They lost over 3 billion euros quite recently. And they're laying off workers like 20,000, and now I hear 18,000 more. Now, a real big contender for this is a bank called SoftBank. And they have $100 billion in assets. They're connected with WeWork, if you've heard of WeWork, And they've lost $40 billion. They've got a really bad business model. What they do is they go in and they try to undercut competitors. They dump a whole bunch. It's a crazy idea, but they dump a whole bunch of money into the business and they force exponential growth in the business. And then what happens is they try to undercut their competition so that they're the only sole person in the market available. But what happens is new competition moves in on them really fast as soon as they're done spending. Basically, what they're doing is they're using other people's money to force a business to grow, And whose money are they using? Who's investing in all these things? In all these, the losses. It's like they're incinerating tremendous amounts of liquidity in trying to be number one and undercut competitors. It's like they don't care how much money they're spending and who's investing in these things like it's all hype. A lot of it's hype in things like WeWork. Who's investing in them? It's pensioners' money. It's the pension funds. Because they're out there right now and they're just looking for yield, anything that they can find to try to get this 7% yield. And of course, with free, easy money out there, zero interest rate policies, they're going for these crazy ideas, pumping money into them. And now the Fed might be actually pumping money into it to try to keep it from going down because they lost $40 billion and they hold $100 billion in assets. It would be big if that goes down, and that might be part of what's receiving the, I'll tell you how bad it is. Quite literally, this SoftBank has got a dog walking application that they've lost $300 million in. Now, these little applications you got in your phone? A dog walking application. Crazy ideas like that. And they lost $300 million investing in this dog walking app. Pension funds are putting their money into things like this. Now, Santander Bank, largest holder of subprime auto loans. This is another contender for the repo money from the Fed, right? They're only verifying income on 3% of their customers. So in other words, 97% of the people that come in and want an auto loan, a subprime auto loan, they give it to them. They give them the car, and then what they're doing is they're repackaging these subprime auto loans together into a bundle. Now, does that sound familiar? Remember what caused the 2008 crisis? With the mortgage crisis, they were repackaging mortgages together and giving them a AAA rating. Well, now they're doing exactly the same thing. And it's not small either, guys. It's over $1 trillion of this going on. They're repackaging these, and they're these subprime auto loans. They're bundling them into packages, and they're calling them ABSs, asset-backed securities. Right? And guess who's buying into all of this? Again, the ones who's funding it is pension funds. Can we see a crisis coming here? Anyway, I wanted to point that out. That's where a lot of this repo money is going from the Fed right now. And these are some of the contenders that I'm looking at, trying to decide who and where this is going, but I can't see behind the scenes who they're actually giving the money to so much, But these are contenders in my mind, where that money's going in the repo market. Now let's get started. Let's open up the charts right here, and let's talk about something here. Deutsche Bank. This article's from Zero Hedge. Deutsche Bank's going to replace 18,000 workers with robots. They've already fired 20,000, 18,000, I guess, more, from what I gather. And they're calling it Operation 4.0. I read this article. I looked at this in Zero Hedge, and down at the bottom here, I started to read this. It says, just fire everybody. Now, okay, he's being a little bit sarcastic in this, but he says, who needs proprietary equity traders? Fire them all. Machines can do the trading anyway. He's talking about Deutsche Bank, by the way. Who needs stock analysts? Let computers determine the strong buys. Who needs credit analysts? And I got about halfway down this list where he's saying, who needs this, fire them all, get rid of it. This is part of their downsizing maneuver that they're calling Operation 4.0. Here's the thing, guys. It just suddenly clued into me. I know what's going on. The German government is shrinking this bank as fast as they possibly can, because they know it's going down. And they want to get it down to a manageable size by not having it collapse, because that would collapse the world's financial system. They want to get it down to a manageable size and then let it collapse, where it can be a controlled collapse. That's what's going on. I mean, it doesn't take a real rocket scientist to figure that out. Now let's take a look at the silver price today. Silver's actually doing pretty good. Even though it's down 7 cents, it's still holding that range in around $17. Why I say it's doing pretty good is the environment that we're in right now. They're swinging their money into places like the stock market. Let's take a look at gold today. $14.70. I figured something out about traders and stuff. They got a very short memory. Because it's just a few weeks ago we had the yield curve inversion pointing us toward a recession. They've forgotten all that already. They've moved on. They started to buy into gold and stuff when they got frightened, Now it's risk on again. They're dumping their gold and they're moving into other riskier assets like WeWork. Or subprime auto loans. It's crazy. Honest to gosh, crazy. We're heading into such a big crash. And all of this stupidity, where they're investing their money now, is just going to melt. It's just all going to melt. Let's take a look at cryptocurrency market capitalizations for today. And what we're looking at is $222.6 billion, 66% Bitcoin dominance. And it's been holding its own the last 24 hours. It hasn't really went anywhere. So what we're looking at is a little bit of a mixed bag in the coins, but we're looking at a Bitcoin price of $81.41, Ethereum 176, XRP 25 cents, Bitcoin Cash 243, Tether, I'm not going to do Tether, Litecoin 55.48, EOS $3.12, Binance Coin $18.51. Bitcoin SV is $107.97, and Stellar is 6.5 cents, and Tron is I can't make out that number, 1.68, I think it is, cents. Cardano is 4.1 cents. And Monero is 57 bucks, 57.99 looks like, or 56, 58 bucks. Okay, now let's take a look at the Dow today. It's down 64 points. I'll tell you, to be honest with you guys, I am a little bit hesitant to call a peak, but evidence would kind of look like this could be a peak in the market, right now. I'm a little bit hesitant, though, to call the peak, because this market has been such a Teflon market for such a long time, and you never know when even more stimulus is going to come into the scene, into the picture, but this market's being supported by stimulus. And why it's very tempting to call a peak right now is because they've been pumping so much into this market, and now the expectations of the market of more stimulus and everything being pumped in, the market has started to price in that already. So if they take in other words, the market is already priced in having their foot right down hard on the gas pedal. If they take their foot off of that gas pedal the market's going to come down. And it could come down significantly because it's been pumped up significantly. So that's where we are with the markets right now. Let's take a look at crude oil, 55.77 right now. And it's up 56 cents on the day, or 1%. Crude oil's been going sideways, has a day down, then a day up. U.S. Treasuries right now. And we're looking at falling yields on Treasuries. And, on the long end of the yield curve, it is kind of significant right now. 4 basis points on the 30-year and 3.4 basis points on the 10-year. Short end's rising a little bit, but only very, very insignificantly. The 3 months is up 0.5 basis point. Let's take a look at the U.S. dollar index. 97.91. The dollar's going sideways. It's dropping right now, but it's been going sideways for quite a while. I can't remember. It's been so long. It's been around 97, 98 for so long that, we can go back like a 1-year chart here, and, you just see movement up and down. It's like marching in the same place. All the way for the last year. Going back a year ago, it was 97.04. Now it's 97.91. So that's a whole year gone by. Anyway, thank you guys for listening to this report. Like and subscribe. Give me a thumbs up. And we'll catch you guys again very, very soon. Bye-bye, guys.